It began with a question that sounded almost too good to be true. What if mining cryptocurrency didn't require expensive hardware, technical expertise, or massive electricity bills? What if anyone, anywhere in the world, could participate using nothing more than a smartphone? That simple idea became the foundation of Pi Network, a project launched in 2019 with the goal of making digital currency accessible to everyday people, not just programmers, traders, or early crypto insiders. The process couldn't be simpler. Users download the Pi app, create an account, and once a day tap a button to confirm they are human. In return, they earn Pi coins. There's no constant mining, no batteries draining in the background, and no need to understand complex blockchain mechanics. This ease of use fueled rapid growth. Millions of people joined, drawn by the promise of being early in a cryptocurrency that might one day hold real value. Those users call themselves pioneers, and many see Pi as more than just an app. It represents opportunity, inclusion, and the hope of financial freedom. While most cryptocurrencies launched straight into open markets, Pi chose a different path. It stayed in development, focusing on infrastructure, security, and verifying its users through a Know Your Customer process. This slow and cautious approach built loyalty, but it also created frustration. People were earning Pi, but they couldn't sell it, trade it, or see a real market price. As the community grew, so did speculation. With millions of users holding Pi but no official valuation, imagination filled the gap. One number in particular began circulating widely: 314,159. Known as the Global Consensus Value, or GCV, the figure was inspired by the mathematical constant Pi. It wasn't set by exchanges or financial institutions, but by community belief. For many pioneers, it symbolized what Pi could become one day rather than what it actually was. Supporters argue that Pi's massive global user base and fair distribution model justify an extremely high future value, especially for those who joined early. But it's important to understand that the GCV is not a real price. It has never been established through open trading or market demand. Pi currently operates on an enclosed mainnet, meaning coins cannot freely move onto public exchanges. Without open buying and selling, there is no true price discovery. Still, the idea of the GCV has taken on a life of its own. For some, it represents hope, independence, and a chance to break free from financial limitations. For others, it feels like pure fantasy. The longer Pi remains enclosed, the more the line between aspiration and reality becomes blurred. That uncertainty creates fertile ground for hype. At the peak of that hype are rumors that spread rapidly across social media. One of the most viral claims suggests that major global banks are preparing to adopt Pi at the GCV price, instantly turning holders into millionaires. The story usually includes vague references to secret partnerships, insider information, and technical language that sounds impressive but lacks substance. Yet there is a glaring issue: there has been no official confirmation. There are no press releases from banks, no regulatory filings, and no announcements from the Pi core team supporting these claims. In the financial world, major decisions are not hidden in comment sections or private chats. Banks operate under strict regulations and transparency requirements. The idea that they would secretly adopt a new, unproven digital asset at a community-determined price defies basic logic. Without evidence, these stories remain exactly what they are: rumors. So if the Pi team and banks aren't spreading this excitement, where is it coming from? Much of it originates from influencers, anonymous accounts, and unofficial community pages. Some may genuinely believe in Pi's future and want to motivate others. Some may simply be chasing attention, followers, or influence. Over time, repeated claims create an echo chamber where speculation starts to feel like fact, especially to newcomers. The Pi core team has repeatedly warned users to rely only on official communication channels and to report misinformation. Still, Slow and cautious updates often struggle to compete with flashy headlines and bold promises. In the crypto world, excitement travels faster than truth. That said, Pi is not entirely built on imagination. Within its closed ecosystem, it already has limited real-world use. In certain regions of Africa, Asia, and Latin America, apps built on Pi's network allow users to pay for services like mobile data or electricity using Pi. Peer-to-peer marketplaces have also emerged, where pioneers exchange goods and services at prices they mutually agree on. These transactions usually value Pi far below the GCV, reflecting real negotiation rather than aspiration. They show that Pi can function as a medium of exchange, at least on a small scale. However, all of this happens within the Pi ecosystem. There is no interaction with major global retailers or open financial markets. Right now, Pi's economy resembles a local community market rather than a worldwide currency system. The enclosed mainnet plays a major role in this. Think of it as a walled garden. Activity inside is allowed and encouraged, but nothing can leave or enter freely. This structure helps prevent fraud, allows for proper user verification, and gives developers time to build useful applications. But it also means Pi has no official price. Any value you see online is either speculative, unauthorized, or based on IOUs rather than real Pi transfers. When the network eventually opens, supply and demand will meet for the first time. That moment will determine Pi's true market value. Many holders are eager to sell, as seen through unofficial listings and IOU trading on exchanges. This sets the stage for a potential clash between those dreaming of extremely high prices and those ready to cash out at much lower ones. When the gates open, the market, not belief, will decide. Outside the Pi community, financial experts offer a more grounded perspective. They widely agree that bank adoption at the GCV price is unrealistic. Integrating a new blockchain into banking systems is costly, complex, and risky. Institutions typically prefer stable, proven assets, not experimental ones. Even if banks were to explore blockchain-based solutions, they would likely use stablecoins or private ledgers, not Pi itself. Experts also point out a mathematical reality. With billions of Pi coins in circulation, valuing each at hundreds of thousands of dollars would result in a total market value larger than all global wealth combined. That simply isn't possible. From this viewpoint, the GCV is seen more as a motivational symbol than a realistic forecast. Unfortunately, hype can attract bad actors. Scammers take advantage of excitement and impatience, spreading fake announcements, promising early cash-outs, or offering ways to unlock Pi for a fee. When expectations aren't met, disappointment follows, damaging trust in the project. The best defense is critical thinking. Verify information through official Pi channels. Be skeptical of screenshots, countdowns, and anonymous claims. So where does all of this leave Pi Network? It remains a bold experiment with a massive community and genuine innovation behind it. At the same time, it exists in a storm of speculation, inflated expectations, and misinformation. Believing Pi may have future value is reasonable. Expecting guaranteed wealth based on rumors is not. Ultimately, Pi's fate will be decided by real-world adoption, secure technology, and open market demand, not viral stories or community-set numbers. Until the mainnet opens, cautious optimism is the smartest approach. Stay engaged, stay informed, and appreciate the journey. But always question extraordinary claims. In the end, reality, not hype, will determine what Pi truly becomes.